Good afternoon and welcome to NYFP. In midday trade on this Tuesday afternoon, the major U.S. stock averages are holding on to session gains with the Dow Jones Industrial Average up by triple digits. Joining me this afternoon is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
Good to be back.
Well, all eyes are on the Fed Reserve as the two-day FOMC meeting gets underway. We're seeing another triple-digit gain for the Dow. But given that we're so high on expectations heading into tomorrow, what do you expect to see tomorrow?
Well, in part, I think, the market is responding also to options expirations this week. And I suspect that the Fed is going to be quite transparent. And I think that Mr. Bernanke will probably lay out some plan and indicate that the Fed is probably going to trim their bond buying program later in the year, towards the end of the year. And I think that should help calm the markets, although I think, volatility might be around during the summer months because of the market trying to actually figure out what the initial impact of the scaling back of stimulants would mean for the market. So while I think we stay in a trading range, and so far, that's exactly what we've had here, a trading range of about 1 to 3%. And of course, volatility, gyrations a bit wider this week, mostly due to the options expirations.
And Peter, we do have that quadruple witching, as you mentioned, at the end of this week. Now, it'll be good to get a little bit of clarification out from the Fed so the speculation can come to an end. But given that we're so focused on the Fed Reserve, what other risks are there to the economy as well as the markets that we should pay attention to?
Well, the risk to the economy, obviously, is still Europe. There's no question about that. And of course, probably even more of a greater risk at this time is the Chinese economy, which continues to show some weakness. In fact, there was some chatter in the markets this morning that perhaps China might be ready to loosen monetary policy. And of course, if that happens, that would be an indication that the Chinese government is quite concerned at the acceleration of the economic decline that's taking place in China. So, global economic activity is a risk here in the States. Of course, we still have the sequester, which is impacting the economy, and we'll have to mull through that. But by and large, if you look at the economic numbers that we've been getting, for instance, inflation certainly not a problem. Today's Consumers Price Index pretty much indicates tame inflation. Of course, moving into the summer months, we probably see a backup in top line producer price inflation, and that will be probably due to higher commodity prices and possibly even oil prices becoming a problem.
Well, Peter, by the time we talk on Friday afternoon, we'll have seen the Fed rate announcement as well as Bernanke's comments, and we'll also have seen global market reaction to that announcement. So we'll see what happens tomorrow, and we'll talk about the reaction on Friday. Thanks for joining me.
My pleasure.